Hello traders, welcome back to my channel and a new educational video. Today I want to talk about level reclaims or false breakouts or breakdowns. This is one of my favorite patterns to use in trading. Again, I have a whole checklist of things related to volume profile, order flow, just classic support resistance, trend lines, etc. that I have in order to get in on a trade, and I want all my things to tick off before I pull the trigger. But this false breakouts is one, or it's a pattern that is very common that I think a lot of you would benefit from knowing and practicing. So we're just going to quickly talk about that today. So when you're trading, let's say you're trading you're in a bullish trend and market is exhibiting this behavior and you're trying to get in on a pullback here. You see that this swing high was broken. We've made a higher high. Now you're expecting a higher low and you're looking to get on a pullback here. That's great. And like I've talked about, if you want to check out my free market structure course, that I have all the links to my YouTube videos in the description. And I talk about this obviously in my trading courses in a lot more detail. But there's several ways to get in on entries. One of my favorite ones is, when market comes, we have a consolidation and then a breakout. And then here we have a demand zone or a bullish order block, demand block, whatever you want to call it. But basically we have, an area where we have a consolidation. If we have a let's say like this, if we put in a volume profile, then also, it would look something like this. We would have a high volume node, then low volumes, and then another high volume node here because we're accumulating volumes here. So this is, sticking out more and more. And as I've always said in all my videos, the edges of high volume nodes is where we're going to find our most important support resistance areas. So when market, let's say, is coming down, first immediate target that I'm going to have is filling in this gap that we made on this impulsive move, coming back into this breakout point where we broke resistance and we left a gap into this bullish demand block. Okay? But, you could just leave a limit order here and then, hopefully market comes, taps it, and then immediately takes off. But what is the problem with this? Well, if you have it predefined well and, you have your stop loss right here underneath your order block, this is your invalidation. So you say, okay, maybe market, if it comes and breaks down below here, it could just continue lower. So I'm going to stop here. But what do we find happens a lot of times? Well, many times, what will end up happening is market comes, spikes down just below the lows and the consolidation into the bottom of the high volume node, and then pushes back up and then just takes off again. So this is basically a deviation. We broke below support, but then we just broke down, and then in just the next few candles, and again, this can be any time frame. This is seen on all markets on any time frame. Price is fractal, and we see the same behaviors on any chart. So when this goes on and then we reclaim, this is where this is a really nice area for me to get long, because thanks to this spike down, now I have a very clear point of where to put my invalidation. Because if this spike lower and we reclaim and then comes back down again, then here I do think there's a very good chance we're just going to break lower from here. But if we spike down into here and then reclaim. So this is a false breakdown, and then we get back above an important support level, then there's a high chance, that we could be, pushing back up, around here, around the breakdown point, etc. Okay, so let's go into charts now, and I'm going to show you some examples. There's many different patterns in classical charting and in other things that talk about these things. For example, here, this is a pattern from a classical chartist called Victor Sperando that had a book called Methods of a Wall Street Master. Then also here, this is actually a graphic that I made when I made a video talking about breakers on YouTube. This is basically from ICT. But as you can see, all the concepts that traders like ICT talk about are basically just different interpretations or different names of things that have already existed. There's so many names for these patterns. There's breakers. This is called the two line break, the 2B buy or sell. Some people call it broken bases. Other people call it fake outs, rates. There's so many different names for this, but in all cases, you can see the basic pattern. We have a high or a low, price breaks through, and then comes back down inside. In this case, with the breakers, same thing. You have a low, price breaks down below, then we come back up, break structure to the upside, and then we get in on a retest. In this case, this classical pattern doesn't wait for a retest, but it just basically says that you buy whenever price reclaims the candle that broke the low before price faked out and then came back up. Okay, so we're going to go over several examples and see how you can use this concept of just false breaks in order to get in on the market. So for example, we have here the futures market, the S&P, and you can see in this case, I'm going to zoom out into the daily chart just to add context to this chart. You can see here we had a very important swing high. This was almost a year ago, and when recently we have come up here, we broke through on the daily, but then immediately we went back down here. So let's dive into a lower time frame and see how this could have been a trading opportunity by using the false breakout concept. So in this case, you can see right here, this is the important level. Price broke through, we made this high, then we had a pullback, we came back up, and here you can see we had pretty much 5 hourly candles in a row, all trying to break again through this high, and they were all basically not able to. So according to the classic pattern from Sperando, we mark off this candle, which is the candle that violated the previous high, and then you can see right here on this red line, as soon as market breaks down below the low of this candle at this red line, then that will be a sell signal, and then in this case you have a clear stop loss or invalidation at the previous high. And then as far as targets, well, in this case, we do have our level here, which this could have been a trouble area. But for me, just looking at the structure, this swing high was the first target for me. And then beyond that, I will look into this last cluster, basically the last bullish order block where price pushed down before we started this whole impulsive move. And in order to fill in this whole gap down into here. Okay, but then you can see in this case how we broke down, and again, then this is considered a deviation, and then in the higher context, this entire move outside of that level, as we saw on the daily chart, could be considered also a fake out or a deviation from this high right here. And then if we want to look at a lower time frame, let's check out what happened right here, right when we were back inside of this important level. Let's go into an intraday chart, and right here we have that same chart, but now we're looking intraday at a 5-minute chart. And here I have my session volume profiles. So this one, let me change this to blue. So this profile's in blue, this is the extended trading hours, and this one's in gray are my regular trading hours. So this pattern occurred in the early morning hours. This is actually 3 a.m. right here. So this happened right when London market opens. We had this fake out right when we had the liquidity injection when Europe market opens, and you can see price came down, tested this important level, broke down below, and now we're finding resistance here. You can see that I have this shaded area in red. Let me actually make it darker so you can see it easier. Right there. And so right here, if we're trading the extended hours, we can see that we had important resistance here to close out the last trading day and into the open. Broke below, previous support turns resistance right at the important level, and then right here we pushed up, and then we just came right back down in. We come back again, and we find resistance again right here. So you can see in this case, we made a very nice over-under pattern, just like this. This is one of my favorite reversal patterns again. Plus, we have the context of a very important level here at the black line. And you can see how this breakout was just basically a unrealized or a false breakout to the upside of this level. Came back down below, found resistance, and then we're accepting back in. Okay, so in this case, you can see that instead of just blindly trying to go short again here, because we had resistance once, twice, instead of blindly trying to short the open in the London hour, we can just wait, and if market closes back down below this level, then we know that we can have a clear risk right here, and then just look to get short again as long as this area keeps getting rejected and respected as resistance again. Okay, then if we go into another example, this is the NASDAQ market intraday chart again, and this is the 15-minute chart. And you can see right here, let me actually change, well, in this case, we don't really even need the volume profile because we're basically just going to be talking about the structure. And again, this is a 15-minute chart. You can see this day we had a very bullish close, and we had the high that we had right here. And then on the next day, we opened extended hours. Then market opens right around here, 9:30, stock market opens. We have a bullish move up. We close above this level, and then immediately market just slaps down. And so here you can see, we can mark off right here in this red line, the open of the candle that broke the level, Then we have a huge bearish engulfing candle back, and then you can see we come down 4 times. We've tried to break back above, and then market just keeps going back down. Okay, so in this case, this is an example of how we had a false breakout, and then once we accept back below here, now we have a clear invalidation, and then we can start looking again to short. You can see we broke structure below this low, and then market continued to go lower. And then the last example, which we're going to see in Bitcoin, this is actually, I've talked about this in my recent market analysis videos on YouTube, but we have a very, very important level that I've been talking about that I was looking to long on Bitcoin, which was the retest of this broken resistance into this bullish order block. We have the falling wedge right here, and then you can see that right when we came into this bullish block and into this trend line from this level, we had a very nice reaction. So let's look at what happened right here. If we go into the 1-hour chart, you can see how this is the trend line, and this is the daily order block area, bullish order block. And you can see right here we had this lows right here, big push up, came back again, push up. So we have a clear support level here marked in green. Then we have this big red candle coming back into the order block. We retest the trend line again, and then you can see a lot of aggressive traders probably tried to be shorting this right here, just getting absorbed by big limit buyers. And then shortly after, pretty much 2 days later or the next day after this, market pushes up, and then we failed to have any hourly close pretty much for almost a whole day below this level again. So that means that this whole move down was a deviation. And then in this case, if we mark off the candle that broke this below and then we reclaimed above in green, you can see right here, this was under the classic pattern I showed you. This will be the signal to get long here with a clear invalidation, either here or below this spike here. Or if we're looking at, for example, an ICT breaker, well, in this case, this consolidation basically was the last push up before the low that broke here. So we didn't get actually a retest here, but the pattern will be, we have a break below this lows, we reclaim, we break back above this high, shift structure back to the upside, and then we look to buy any retest back into the bullish breaker, which in this case you can see we actually didn't get that in. And you can actually see we reclaimed another area right here that I hadn't marked. We had this whole area, pretty much same scenario that we had here. Support, broken below resistance, and then we came back above support. Okay, so you can see how we have all these areas of SR flip levels, but basically, we could take advantage of false breakouts like we had right here. And as soon as we see price reclaim and start respecting again this previous area of support, then this is a good area that you could look to get in. Obviously, higher time frame context of the trend is very important. This, was a lot of bullish confluence on the high time frames for a support here, and that can all be contributing to your forming your trading strategy in order to get long at these levels. Okay, that's pretty much it for the video. Hope you enjoyed it. Again, please make sure to subscribe, hit the thumbs up, check out, also follow me on Twitter. All your support helps keep this channel going, and check out my courses as well for more in-depth analysis and strategies that I use on all my trading markets. And I will see you all soon. Take care.